Good afternoon. Welcome to today's edition of Advisory Live. I'm your host, Masoud Ghaussi from Nasdaq Market Site here in New York, Times Square. Joining me today is Jack Menke, our TMT analyst. How's it going, Jack?
Pretty good, Masoud. Good to see you.
Good to see you, too. So trade tensions are easing. Markets are soaring. The Nasdaq has been soaring, hitting all-time highs. What's going on? What is investor sentiment like?
I mean, you know, since it is the end of the summer, I thought I'd just throw out a few facts before we kind of get into it. Obviously, Nasdaq has been getting a lot of attention with hitting new all-time highs above 8,000. Investor sentiment has been pretty bullish so far in the tech sector. But, you know, if you look back 15 years, just to kind of get a little bit into perspective, in the last 15 years, there have only been 2 years that the Nasdaq Composite has had negative years, and that was 2008 and 2011. And 2011 was just a 2% drop, so it really wasn't that much. But if you average out all of the positive years, you're seeing a 19% gain in all of those years. And if you actually factor in those 2 down years, the Nasdaq Composite is actually rising 14% per year.
Wow.
And that's not even including the year-to-date performance so far, which is around 17%. So tech is just really driving the markets higher. Now, if you look at the tech sector overall, or if you look at the S&P 500 overall, tech is now making up 25% of the entire S&P 500, which is really at historic highs, and it just goes to show you how much investor attention is being paid toward the tech sector.
It's pretty impressive. If you look, I think post-World War II market returns, S&P 500 is somewhere between 9% to 10%. So definitely over the last, I guess, 2 decades, there's been outperformance by the Nasdaq. What exactly is driving these gains? What's behind the moves with respect to tech?
You know, really what the whole conversation has been like over the past probably 2 or 3 years, there's really come down to 2 things. One, it's just really strong fundamentals and the opportunity for growth. And we've just seen a huge surge in some of these major mega cap companies that really kind of drive both of those, that narrative to push the tech sector really to all-time highs. So you're seeing valuations that are really within lines of compared to the S&P 500. If you actually look at the S&P 500 tech sector, about half of the companies are actually trading below the 19 PE ratio for the S&P 500. So that is obviously a stark contrast from what we saw in the 2000s when valuations were just completely out of control. And yes, at that time, tech stocks contributed about, or accounted for about almost a third of the S&P 500. That actually dropped down to about 14%, and historically it's been about 15% since then. So really to see a 25% weighting in tech stocks has just really been a phenomenal feat for a lot of these companies. If you actually look back towards the 13F filings with a lot of the institutions that were released a couple of weeks ago, you know, there has been a lot of narrative about, you know, are tech stocks at, you know, reaching new highs, like where is the opportunity for growth? And what we're seeing actually is that there still continues to be big institutional buying activity from a lot of the major companies, or from a lot of the major firms. You're seeing Fidelity actively buy shares or actively increase their position in 11 of the 12 largest tech stocks. You're seeing JP Morgan Asset Management, you know, other firms that are really substantially increasing their positions to tech companies. And actually really the only 2 firms that I've seen sort of actively reduce their position has been sort of like Wellington and Nuveen. There's only been a couple of names like that. But really the gains kind of outstrip all of the selling activity, and that's really just to reduce the amount of exposure they have to the tech sector.
Got it. Any sort of risks that we should be concerned about in the tech sector?
I mean, again, what I was saying before about really the whole narrative in the sector has just been related to strong fundamentals and opportunities for growth. And it's really amazing when you see some of these large tech companies like an Amazon, Microsoft, Adobe, is that they are finding these opportunities for growth given their size. It's really amazing. They're almost acting like a smaller mid-cap company in terms of where they can find some of these growth areas. So if I were to see for some potential for slowdown, you'd have to look at the macro side. You'd have to look at the interest rate levels. Obviously, it's been a rising interest rate environment. We saw in May with the 10-year interest rate kind of breaching above the 3% level, which caused a little bit of volatility in the markets, but it really hasn't done anything in terms of long term, at least for year-to-date performance. So I would have to look at the interest rate environment, see how that develops, and then obviously the trade war conversations with China.
Absolutely. One last question in terms of valuations. I know you touched upon it. Just at a high level, are we in a bubble? Are valuations stretched? Any sort of take on that?
I mean, just going to my last fact, I said before, about half of those tech stocks are actually trading below the S&P 500 PE of about 19, 20 or so. So if you look at, when we were last in the bubble with 2000, the valuations were just skyrocketing. There really wasn't any fundamentals that were supporting those stock prices. So you really need to kind of compare and contrast that environment with today's environment, and that those fundamentals are really driving or really supporting these tech valuations. And again, these opportunities for growth. And we're just in an environment, we're just living in a world where tech is the number one sector that is just really overhauling our lives in an everyday aspect. So you really see tech just sort of overtake our lives, and that's really kind of driving these companies' bottom lines.
Thanks, Jack.
Masood.
It was Jack Menke, TMT analyst here at Nasdaq. Thank you for joining us. For more information, visit us at business.nasdaq.com.